Good afternoon, all. This is Marvin Gill from StockMarketPlan.com with your February 14th, 2011 Stock Market Watch. Here we are again, guys. Surprise, surprise. Market is up on that bullish run that we called about, well, been calling for a very long time. Nothing seems like wants to break this run. Everybody's calling for it, but the market says no, it won't do it. Why? I have no idea. It just is what it is. The market today basically followed the same pattern that it's been following for most of the sessions, the previous sessions in the last 2 weeks, which is that small gap down with a shakeout, and then it just recovers into the day and ends up finishing green. The only thing again that it is consistent is lower trade as we climb up. You see it here, okay? You see it right here. Let's draw a trend line there so you see what I'm talking about. See it there, and then you see it here. Again, volume decreasing on green days. We're going up, volume decreasing. We have a break here. Actual volume picks up. That's not good. Not that much, but you know, stronger than the up days. And then the same thing here. We start decreasing in volume again. Why is this important? I ultimately think that the market will probably come back to the 20-day moving average, this green line here, before it motors higher in a meaningful way. Even maybe the 50-day. And guys, if it even came back to the 50-day average, we would still, I think, we would just have to look and reassess. But I think strongly that we'll still be in a bullish trend, in a bullish pattern. Definitely we stay above this low here that was made on the 28th of January. So I mean, the market just looks great. It's extended. Let's go ahead and look at the intraday pattern of the day and show you what I mean about that pattern that we've seen for the last few sessions. Here again is the intraday chart of the day session. It's a 5-minute chart, each bar representing 5 minutes of move here. Okay, yesterday's high, again, the green dotted line, and then the low of yesterday is which would be Friday, not actually yesterday's markets were closed. It's this red dotted line here. So it was a wide range on Friday, and we stayed in the upper, real tight upper range, very bullish action. We never really tested, you know, we could have come back here and then come back up. That would have been fine too, but no, we stayed up on the high range of Friday's range, excuse me. So again, let me zoom back in here and show you. I just had to zoom back out to show you that red line. But here it is again. We gap down, okay, and we do the shakeout here, and off we go again to the races to the end of to the close of the market. Again, guys, the theme is bull. Okay, there's nothing here about the market is showing us that it would tell me, hey Marvin, let's start shorting stocks. A lot of people out there are saying, you know, we should start shorting the market. Why? You're asking, why do you want to short the market? Well, just because it's so extended, it's too high, it's got to come down. The market, I repeat, and I would tell you the same thing if the market was going down. I would tell you the market does not have to stop going down. It could keep going down, and looking at it inversely, you know, you could go out there and start picking bottoms on the market and get very hurt because the market keeps going down, kind of like what happened back in the tech bubble and the real estate bubble. People kept calling bottoms. Well, the market doesn't work that way. What I'm going to do is look at the everyday markets, everyday market action, and try to just translate it into something meaningful where we can say, okay, this is a rational decision that we're going to make, a better informed decision about when we move into the market, when we move out of the market. But for right now, what I'm seeing, market's bullish. Market's keeps tearing until I start seeing things. The one thing that I see that is negative is that volume pattern that I showed you on the previous screen on the daily, okay, on the daily chart where the volume is coming in lower. Other than that, the market's motoring, it's working. There's nothing about it that would tell me, Marvin, let's start shorting the market. Just because the market is high and higher, that's not a good enough reason to start shorting the market. You can get seriously hurt out there. And as you know, when you short the market, your risk is infinite, because of stock or market can go infinite number. You know, it's not like buying a stock at $15. What you can lose is $15 and that's it. You know, the market can just keep motoring higher. You can get seriously hurt. So just wanted to share that with you. I did last week tell you that I was gonna start posting videos that will talk exactly about that. What are the things that the markets will show me, that have shown me before, and that I've looked for in previous market tops that will start coming up again. Okay, and there are things the markets will show you footprints and things. Yes, they have to do with volume, and they have to do with resistance levels, with averages. And I'm going to touch on a few of these on a series of videos, because this is what everybody's wondering. Everybody wants the market to go down so bad, and it isn't. It doesn't want to. Investors keep buying up this market, even with all the noise about Egypt and oil and gold and inflation. It does not matter. The market's going to do what it wants to do. And that was the biggest thing for me to realize, that as I learned. I mean, I've only been doing this for 11 years, but it's learning to listen to the market, and really you got to be kind of like a fair weather fan. You have to be a bandwagoner when it comes to the market. You can't be a bull, you can't be a bear. You just have to be the market. You want to be the market. You want to be flexible. Flexibility is key. So with that said, I'm going to get off my soapbox. It is 4:54 p.m. right now on a Monday evening. I'm going to take my wife and kids out for Valentine's Day. Oh, you guys have a great evening. Happy Valentine's Day out there, and we'll check back with you tomorrow after the market close. Again, I encourage you to visit www.stockmarketplan.com. There, it's a site where I have a lot of information, and this just keeps building on and having a lot of fun with it. And then we also have the YouTube channel that you can subscribe to. Stock Market Plan is my channel. And then Twitter and Facebook, I'm on there too. So guys, have a great evening, and we'll talk to you tomorrow. See ya.